Hi, this is Kerry Artak with Wicked Stocks, bringing you what I think is going to be the first in a series of weekly updates on the Mag 7. The Magnificent Seven stocks. They're the group of the high-performing, influential companies in the U.S. stock market: Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla. I may have missed one or two, but there are seven of them, and they really dominate the indexes. They're like 35% of the S&P 500 in terms of market weight, market capitalization. And these are, stocks that are driven by technology, and they have market dominance, and so they're worth watching. And especially in recent months, over the last year or two, as AI has become increasingly enmeshed in several of these companies, Alphabet no exception. Microsoft and Nvidia are also two of them that are heavily involved in AI. They're all involved in AI, but you've really got Google or Alphabet, Microsoft, and Nvidia are the big three in terms of their investment in AI for the future. So, without getting too deep on the descriptions of these stocks, I'm just going to jump right into it. In no particular order, by the way. I'm going to look at all of them, all seven of them. Several of them, actually, I cover either A, through wickedstocks.com. That is Apple. I provide that on a weekly basis. I'm going to give you a basic snapshot of Apple. Certainly not everything that we're looking at, because we have subscribers who are paying for that. And of course, our Wicked Stocks YouTube channel has free daily Nvidia and Tesla analysis. But I'll also give kind of a broad brushstroke image of both of those. But let's start with Alphabet, the old Google, symbol GOOGL. This is a weekly chart. This stock is still strong, upward momentum still intact off of that April low from this year. And we did just recently, a couple of weeks ago, close above this inside channel at 200.59. Now, we've been topping out the last couple of weeks at this February high of 207.05, but we pushed through it last week. We had an outside week, higher settlement on the week. We're above this channel top at 200.59. So I say that holding above 200.59 should, by the end of October, possibly by the end of September, possibly over the next 3 to 5 weeks, yield this very significant 219.74 to 220.77 region. 219.74 is a full A-B count. That is the January 22 high. Subtract the October 22 low and add back to the January 22 the difference between the two. It is the full swing. And it correlates really well with this rising 2.5-year channel top right now, soon to be 3-year channel top at 220.77. This upper area, 219.74 to 220.77, is our long-term resistance, where Alphabet can top out, I'm going to say possibly through all of 26, but let's just say through the first quarter of 26, we can fall away back to the 200.59 channel top and possibly even further south. What is a trend line right now, roughly around 150, becomes attainable within a full year or less of testing the channel top at 220.77. So you've got a channel bottom around 150 that would be not necessarily indicated, but you must allow for that as a 1 year or less possibility. So 220.77 expected over the next 2 months or sooner, able to contain buying through the first quarter, and that remains in effect above 200.59. Now, looking downside at Alphabet, we do have 200.59 represented here as that horizontal line. That is that channel top I showed you. If we close back below it this week, then we fall to 183.99 within 2 to 3 weeks with present volatility. This formation is a 5-month channel bottom that could, by that point in time, contain selling through October, and we can round up again. So in other words, if we do close below 200.59, it's really just a pause in upward momentum. I would then expect several weeks downside to 183.99, where we can recoup nicely through the rest of the year. Finally, with respect to Alphabet, it is a settlement below 183.99 that sets up 141.59 as a probable 3 to 5 month objective. let's move on to Amazon. Amazon is kind of in this two-sided framework. We've come off the April low, but we are approaching the high settlement price back in January of 237.68, and we have the actual all-time high of 242.52. So it is this area the market is approaching and showing just sort of a pause in upward momentum. For right now, as we move through September, I'm going to call this a two-sided framework between roughly 212.80 downside, that is the low of the high from a month ago, and 242.52 upside. Now, upward momentum remains intact over the 5-month time frame, and so we can I'm not going to say easily, but I wouldn't be surprised if over the next few weeks we do close above 242.52. And if we do, we have a 1 to 2 month bullish continuation to the 262.19 2.5-year channel top, where we can top out not only through the rest of the year, but even through the first quarter of next. So right now it's a two-sided framework near to midterm.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and Nvidia, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
And we get bullish resumption above 242.52. Inside of 2 months, I would expect 262.19. Downside 212.80 is really the part or the beginning of a narrowing zone of meaningful support down to 203.37. And this is a rising 4 or 5 month channel bottom that can absorb selling, through September, even through October, and from here we can round up again. So bottom picking in the narrowing 203.37 to 212.80 region, anticipating a continued strength as we move through the rest of the year. And if we don't test this lower area, you can buy Amazon on strength with a settlement above 242.52, 262.19, and reach within 2 months. I'm going to say this 262.19 level remains in reach over the next 3 to 5 months, so long as we do not violate this 203.37 formation. But if we do close below 203.37 in the coming weeks, we've got a good high for the year. The next 3 to 5 months then likely to fall back to 156.59. On to Meta. Meta has come close the last couple of weeks to reaching this significant 2.5-year channel top. And if we test this formation at 825.93, once again, like the other stocks, it is capable of containing buying through the rest of the year, possibly well into next week and fall away. If in the coming weeks we close above 825.93, it is if you're not long already, it is a go long strategy over the next. Now this rally is April, this is about a 5-month rally. So within 5 months of closing above 825.93, we could actually see this full channel extension, the doubling of this previous channel at 1117.42 within about 5 months. Let's just call it a half-year rally up to 1117.42 if we were to close above 825.93 in the coming weeks. Until then, we've got near-term support at 728.05. We can bottom out here into September and round up and fill this wedge out for the next month or two between 728.05 and 825.93. If we close below 728.05, I would expect like a 1 to 3 week collapse to 645.63. And this is a 5-month channel bottom that can contain selling by that point in time through October, and we can round up again. If I'm looking at the midterm outlook, kind of your 2 to 3, 3 to 5 month dynamic, you really are selling long-term resistance at 825.93 and buying midterm support at 645.63. I don't expect to see 645.63 once again unless we were to close this week below 728.05, and then it should be pretty quick, within 1 to 3 weeks. And with respect to the downside, big picture, if we were to close below 645.63 in the coming weeks, then we've got 518.11 as a realistic 2 to 3 month target where we could bottom out through the first quarter of next year. On to Microsoft. Microsoft actually tagged a long-term channel top about a month ago that is now at 558.03, and we also closed recently, a few weeks ago, back below its sister formation at 532.13. This stock is looking heavy, mostly because we tested long-term resistance. This is a 3-year structure, and now that we've tested the 3-year resistance, you must allow for the possibility longer-term bearish rotation to 336.05 and climbing. I don't have this as an objective. I'm not expecting it, but I wouldn't be surprised. And in terms of long-term investment in Microsoft, I would be out of Microsoft unless we close above 558.03, and then we're off to the races again longer term. But until then, this is a ceiling that we tagged, and this market is very susceptible to bearish rotation. We did close below last week for the first time the low of that high that was put out in late July. And having done so, having closed below 509.43, the 468.35 high that was put out back in July of last year, about a year ago, remains in reach now over the next month or two. We can bottom out here through the rest of the year, but just remember that holding below 558.03 will keep 366.05 in reach as a no surprise possible longer-term objective by this point next year or sooner. I don't expect 366.05 unless we were to collapse below and settle below this 468.35 high that was put out a year ago. Until then, we can bottom out here through the rest of the year, round back up within 3 to 5 months to 558.03. All right? What else did I have to say for Microsoft? I kind of forget. Yeah, this is just sort of a repeat of what I just said. We are below 509.43 over the next month or two, 468.35, an obvious support area where we could bottom out through the rest of the year and round up again into the 550s or higher. Was it 550s? Bear with me. Yes, it was 558.03. And yes, once again, if we close below 468.35, I would expect within probably 3 to 5 months the 366.05 long-term channel bottom. On to Apple. Just one shot I'm giving here. When our WickedStocks.com subscribers get a full assortment, about a dozen charts. We go over near-term sell signals, mid-term targets, etc., etc. But this is a big picture, broad brushstroke of Apple. We tested a long-term channel bottom at 192.27 this week. That was back in April. We tagged a 5-year channel top in December, tested it to the very tick, and when at the time we'd mentioned how the low 190 should be considered potentially in reach within a full year, very similar to what I just said with respect to Microsoft, having tested a long-term channel top. Don't be surprised if by this point next year or sooner we look at 366.05. This one was accelerated by the tariff war talk, if you will, that played out from like February into the April low. We came off of this channel bottom at the time. At that very week, the Trump administration, allowed exemptions for Apple-type products, and that created support in Apple. And so having closed above on a continuous basis this long-term channel bottom, and after testing it, we'd mentioned how this former channel bottom that is now at 234.37 should be considered a 2 to 3 month target. We've been testing it now for the last few weeks. In other words, 234.37 may contain buying through September, and below which you must allow for the low 190s again as a possible 2 to 3 month downside target. Now at wickedstocks.com in our weekly Apple analysis, we give actual precise sell signals in the interim that lend toward the probable testing of 192.27. Inversely, if we close above 234.37 at the end of this week, I see by the end of the year new highs and 275.55 long-term 5-year channel resistance, where we could top out through the first quarter, possibly even further into next year. Nvidia, of course, we cover this on a day-by-day basis. We closed back below this channel top last week at 179.94. This is our ceiling for the time being, and below which, very susceptible to falling back to 149.29 over the next couple of months. We need to set a settlement back above 179.94, and I will say, if you go to wickedstocks.com, we need to see a settlement in the NASDAQ 100 and the QQQ above their respective 2.5-year channel tops, which have been holding very well for both of those latter two indexes. And And so, if you've got the triple Q analysis at your side, you can see if we get a buy signal in the triple Q at the end of this week above its respective 2.5-year channel top. And if so, we've got then, I'm sure, Nvidia also closing back above this formation, anticipating 219.64 within 2 to 3 months. But until then, this market remains on its heels a bit, very susceptible to falling back into the upper 140s over the next couple of months, so long as we're unable to close above 179.94 at the end of this week. Tesla, just two charts here with Tesla. Once again, I put this out on a daily basis at Wicked Stocks YouTube channel. We've got overhead resistance in the low to upper 350s. It's been holding nicely for the last few months, and below which we can fall back into, not only the low 310s over the next few weeks, but over the next few months, all the way back to 250, 278. So that is the long-term, 350s long-term resistance, 250s long-term support. If we were to close above 359.13 over the next few weeks, then I see a bullish continuation within 5 to 8 months or so to the 521.42 5-year channel top that we actually almost tested last December. But we'd be back at it again if we close above 359.13. Until then, you're selling 350s, buying 250s if you trade 2 to 3 month time frames. Wow, I'm just about hitting 15 minutes. I do want to keep this video to 10 minutes or less on a week-by-week basis, so I'm going to be a little quicker next week. And that is it. Please click like, share, subscribe. I will be back next week with another edition of Magnificent 7 Updates.